Hello, everyone. Thank you for joining us for today's Intrinio webinar and taking the time out of your day. My name is Alec Isaac, sales engineer here at Intrinio, and I am also joined by Evan Hyde, one of Intrinio's senior software engineers. Today, we will be talking about Intrinio's filtered real-time and delayed options feeds. We'll cover what filtered options are, what's included in the feeds, and what you get by working with Intrinio for your options data. We'll also be showing a demonstration of the data. And then finally, we'll have a Q&A session at the end, so you're welcome to ask any questions that we left untouched throughout the chat function. So diving right on in, what are filtered options and why should you want them? Well, anyone who's interested in options trading or equipping their trading platform to meet the needs of option traders needs access to real-time or delayed option data. If you were to build out the solution in-house, you'll find it comes with a staggering price tag. This price tag is a combination of two main factors. First, Oprah is the solitary source for option data, and the exchange license to access Oprah's data feed is in the thousands of dollars annually. Once you've accessed their data feed, Oprah's unfiltered options feed is pretty complex. Thousands of contracts and expiration dates are processed every second during market hours, and as a result, the cost and time to connect, build, and maintain server infrastructure, as well as endpoints for accessing this unfiltered options feed can easily surpass 6 figures annually. As a result of the difficulties our clients were facing to obtain reliable and clean options data, Intrinio stepped in and sought to build this infrastructure ourselves. That way we can ensure widespread access in an easy-to-use platform. In the end, our end product resulted in a filtered options feed where we ensure users receive data sourced directly from Oprah, national best bid and offer data across all exchange, real-time or delayed format, and delivery in a low latency Web API or WebSocket feed, depending on your use case. The data points you see here are returned for every option contract when utilizing our Web API to pull option data throughout market hours. These exact endpoints, or these exact objects, are available in both our real-time and 15-minute delayed offerings. Additionally, as you'll soon see, we offer a wide variety of query parameters with our options endpoints to make filtering through the options ocean a true breeze. Going through this slide a little more, you'll receive all of the company metadata assigned to the option contract or option chain of your choosing, as well as all of the pertinent data regarding the option itself, the last trade price, the size, bid and ask, the volume, the open interest on the contract, American or European style, as well as all of the Greeks and implied volatility. Additionally, as you'll soon see as we walk through the feeds themselves, we provide all of the stats we use to calculate the Greeks via the Black-Scholes model. So here we're going to walk through using Postman a few of our web API. These are the most popular web API endpoints. And often how about our users go pulling in either an entire option chain or all of the data itself for a given ticker. So the first endpoint we're going to discuss is the Intrinio options expirations endpoint. This endpoint will accept the ticker of your choosing, as well as two query parameters, after and before, but those are optional. What this endpoint will do is return all expiration dates for upcoming and expired contract data. Additionally, if you wish to further filter it, you simply just need to add in a before and after date, and you can place a color around the expirations you wish to receive. Then you can use our Intrinio options chain by ticker and expiration endpoint to retrieve all option data for that given expiration date. As you'll see here, once again, you just need the ticker you're looking for, and now that you've retrieved the expiration date, you can filter the entire chain for that date. So the first return you're going to see is all of the option data present. As we discussed in our last slide, there's the metadata on the contract itself, the pricing data, and if we look below, we'll see the stats as well. This will be for every contract that is offered on that date for that particular ticker. So you can ensure that you have all of the data right at your fingertips. Additionally, using the filter parameters, we can now switch from only receiving calls or only receiving put contracts on that date. We can filter by the strike itself, greater than, less than, or equal to a particular strike. You're also able to filter by volume, open interest, and the moneyness to ensure that you're only receiving the data you want to analyze or for your end users to utilize. The other option to retrieve all option data through our endpoints is by simply using a date in the ticker itself. The option contracts filter will return all option data after a particular date or before. So once again, you can put a color around the date you'd like to see. Additionally, with this endpoint, you can filter by strike to ensure that you receive only the data you want. This data will return the option contract metadata for every option going forward. So you'll see the option contract, the ticker, the expiration date that this one falls on, the strike, and the type. With this return object, you can then utilize the option contract itself in our next three endpoints to receive the further option data. So you can also filter by type and strike as well. Finally, we'll pull an option contract into our next endpoint, which is option price by contract. If you know the contract or have now filtered towards the exact contract you want further information on, you just can drop it right here into this endpoint, and you'll see only the option data for that given contract. These are used by our users when they construct watch lists for options and they know exactly the contract they want to see and exactly the one they want returned on a given schedule. It's also additionally used to track portfolios and see how performance is managed. The next endpoint we're going to talk about is the options end of day endpoint, where using the same options contract, you can see how an option is performed in the previous trading week or 5 trading days. This allows our users to track the changes in implied volatility, open interest, daily volume surges, as well as the price itself, to ensure that they're kind of managing exactly where the volatility of the contract's going, how it's been performing, and these are particularly popular around earnings calls to show exactly where the IV is moving in between calls. The final endpoint we'll see will return the option stats for any given contract. For this one, you'll see the Greek's implied volatility, as well as the factors inputted to calculate those stats. That way, you can ensure that you know exactly what is being calculated. These are the most popular endpoints that we offer for our users, and all of them allow you to easily navigate option data in a very streamlined manner. We'll also be reviewing the WebSocket after, so depending on your use case, either the Web API with pull request is your end target, and or the WebSocket pushing data into your platform. That said, there's a couple different little tweaks between the return objects. Unlike with the Web API, in order to keep our latency very low for the WebSocket, the return data is more or less a little more concise to the point. With the WebSocket return data, you'll receive the option contract ID, the last trade price, the last trade size, the timestamp of that trade, and the type, whether it is a put or call. This allows us to perform very low latency over systems and power algorithms using this data as market makers. Now, my colleague Evan will walk you through the WebSocket endpoint and give you a feel for how that operates.
Thanks, Alec. If you could just play the video.
Alrighty.
And is there any way to get volume on this bad boy?
There is not.
Oh,
it's your
okay.
volume. Fire away.
It's my volume. Okay, so what I was saying in the video is that this is a way of, okay, go ahead and pause it real quick. Cool. The WebSocket is more of a server workload. It's a feed as opposed to a request response platform. So demoing it, this is all done in Visual Studio. If you sign up for our WebSocket product, we're going to be providing you with an SDK. Included in this SDK is a sample application. The sample application is pretty easy to use. My cursor in the video is roughly hovering over the main method there. Below that, on line 57, you'll see that I'm creating a new client object. All you have to do to use this, to use the WebSocket feed, is create a new client object and then specify the, or call the join function. What that'll do is it'll subscribe on the server and begin passing back data. With this particular, we have basically two different endpoints with the WebSocket. The first endpoint will provide updates on specific contract IDs or full option chains. And for those of you who don't know, an option chain is every single option contract outstanding for a given underlying symbol. So the first piece that we're going to look at is querying for specific contract IDs. Alec, go ahead and play the video. Thank you. So, excuse me. Yeah, the first piece we're going to look at, okay, here I am pointing out that all you have to do is call the join method. And then we're going to be using the contract IDs. Those are in the right-hand pane up here. In this case, we're going to be subscribing to to an Apple contract, an Amazon contract, as well as a Tesla contract. When we hit run with the application, we're going to connect to the WebSocket feed. We're going to subscribe to the channels that we specified, and then we're going to begin pulling data back. In this sample application, all we're doing is counting the symbols or identifying which symbol has the most activity, the greatest amount of activity. It's a pretty basic terminal application, but it'll give you a feel for how to use it and how you can hook it up to your own product and do whatever it is that you might need to do. The other piece that we're going to look at is working with a full option chain. In this case, the option chain for GE. GE, I believe, has something like 700, I think today, actually, if I look, yeah, it looks like about 716 option contracts for it. So in this case, we're going to be listening for updates on all 716 option contracts for GE. It's the same thing. You just hit run and it'll begin counting in the sample application. It'll begin counting all of the trades as well as the asks and bids for your option chain here. These are the two main endpoints that we have for the WebSocket feed. We also, however, have, and I haven't shown this in the video, we have what we're calling a Firehose feed. The Firehose feed provides data for every single option contract available. And right now, at any given moment, there's roughly 1.5 million different option contracts. The Firehose feed will provide information on all of those. Right now, the Firehose feed provides just trade data, whereas this other Oprah endpoint provides trade data as well as ask and bid data. Those are the WebSocket feeds. Alec, is there anything you want to add to that?
I think you covered it very well there, Evan. Additionally, if you're having any issues implementing this, this is one where our team will definitely help integrate it into your system as well to ensure it's customized to your use case or needs. Very powerful endpoint, provides a lot of data. So definitely getting your infrastructure right with it is critical to a successful algorithm or application. So that's where I'll leave that one at. And then you've seen the data, but you're probably still wondering, well, why get it from Intrinio? Because there are other providers. However, what separates us is the ease of our endpoints. And first off, the reduced demand on your infrastructure with them. We've borne the costs of servers, infrastructure, so that our clients don't need to add yet another system to maintain in their platform. That way, you guys can focus on delivering the best product possible while reducing expenses and overhead at the same time. Additionally, our tools and resources are built by developers for developers, because we want to make sure that our clients are spending more time on maximizing their platform rather than spending it on wrangling data and troubleshooting headaches. Moreover, to help things keep simple, we offer integration assistance, comprehensive documentation, and tons of other tools to help you power your platform, application, or algorithm. And if you do run into any difficulties with your data integrations, we offer the best support in the industry. As an Intrinio client, you'll have a dedicated customer success team accessible by live chat, phone, or email. Additionally, you'll have access to our ticketing system for any technical or data quality concerns, and our engineers are available to answer questions or resolve any roadblocks. We even offer promotional opportunities with our marketing team. So while you're working with Intrinio, we're there to help with anything and everything, and you're more of a partner than you are a user. We also help you navigate the tricky OPRA and their exchange process. We leverage our experience to help you understand your costs up front, submit your paperwork correctly, and get connected to the data quickly, minimizing any headaches that you might have along the way. Additionally, unlike other providers, we don't have a one-size-fits-all solution. We work to be as flexible as possible with our licensing fees, and depending on your ultimate use case, get you the best deal possible. So whether you're looking to use real-time or delayed options data, internally or externally use cases, we will ensure that you receive the best value possible. Finally, in addition to our options data, we have a wide variety of other financial data available that we can help integrate into your platform. Fundamentals, equity prices, or even alternative data, we provide all of those in-house and have a huge network of vetted third-party providers for any other data needs you might need, ensuring that it all comes through the endpoints that you're familiar with. If this webinar has piqued your curiosity, or you believe you found the solution your platform needs, Intrinio offers a free trial of our option data to ensure that our offering is a proper fit. To avoid incurring any fees from OPRA during the trial phase, we only allow users to test our 15-minute delayed options data feed. However, do not worry, because we've made upgrading from delayed to real-time as simple as flipping a switch. So when you're ready to upgrade, you won't have to make any changes to your in-house integrations. You simply will come to us, we'll help you facilitate the additional paperwork needed to go from delayed to live data, and you'll be off and running. Finally, throughout the trial period, you'll get a sneak peek of all the assistance you'll receive from Intrinio in getting you set and go. Our trials are usually about 2 weeks long, and our technical team will be on hand to answer any questions you might have while you're getting connected and up and running. If you're interested in a personal demo and you thought this webinar was too short and sweet to really grasp it all, you can email us at sales@intrinio.com or visit intrinio.com and click the request a consultation button, and you'll speak with one of our representatives who can help you get things ironed out so you can go moving forward. Now, because you guys might have questions, I'm going to open the floor up to any questions. So please put them in the chat and we will go through them in order.
All right, so I see there's of the first question, is there a whole feed endpoint? I assume this is asking whether or not there's an endpoint that provides information on the entire options market. As I mentioned, the WebSocket endpoint does provide access to all of the trade data for like the entire options market, all 1.5 million contracts. We do not provide, at the moment at least, ask or bid information on that. The volume is just too high, nor do we have a REST API endpoint that can handle the entire like market data. We are looking into ways to provide like snapshot data of the entire market. But if you're requesting information on all 1.5 million option contracts, it's a lot of information for you to download. And it's not really like the proper use case for a REST API endpoint. It does make a little bit more sense to provide like an end of day whole feed file download, as Christopher Evans has pointed out. And that is something that we are looking into. At the moment, we do not provide that, but that is a good suggestion. And it is a product that it is on our roadmap. Perhaps Alec can answer the next question. How does pricing compare to volatility?
Pricing compared to volatility. Could you elaborate a little further on the question?
Yeah, that's from Gerald. If you could provide a little bit of clarification on that. Volatility precedes data like yours. It's a service. Alec, are you able to read the question?
Okay, comparison between providers. Got you, Gerald. That's something where if you requested a consultation, we could run through it further. We offer a slightly different offering than they do, and I know our sales representatives can certainly help explain the pricing differences there. This is more of a technical questions regarding the feeds themselves. However, if you are interested, I strongly suggest requesting a consultation, and we can give you all the answers that you're looking for. Hope that helps.
All right, Alex, so the next question, let's see here, is what historical data is available for download for research purposes? I've not spent a lot of time working on the historical data piece. Perhaps you can provide a little bit of insight into that.
So we do offer 3 or 5 years of historical data downloads, and this will be an additional offering in addition to our API. Our clients will utilize those for research purposes to backtest their strategies and then forward walk them with our API or WebSocket. They're available in a flat file and or in our Snowflake solution for quick and easy querying. Once again, though, the pricing and all of this is just something you'd receive from requesting a consultation. So I strongly suggest you sign up for those and can give you further clarity on the entire options package. But we do offer 3 to 5 years of historical option data.
Thank you. The next question is, do we use contract duration matched interest rates and dividends in implied volatility in Greek calculations? We do use dividends in the calculations. The interest rate is the risk-free interest rate. I believe it's a 10-year, the risk-free rate, the 10-year risk-free rate. I don't believe it's duration matched.
That is correct, Evan. 10-year risk-free, as well as incorporating any dividends that a ticker or company might offer.
Do we provide the estimated dividends you use? It's not included as one of the statistics that's passed back with each object. That information should actually be available from another one of our endpoints, like for the underlying security. Off the top of my head, I don't remember what endpoint that is, but I believe
that
we
endpoint
do.
will be our corporate actions endpoint, where we can see ex-dividend dates, forward dividends, past dividends, and all of those go into calculating the IV. They say all of them, it's just the corporate actions upcoming, what they've decided to pay out for that given period.
All righty, thanks, Alex. The next one, does the real-time data have a delay? So if you're hitting the REST API endpoints, there is going to be a delay. Usually the delay is going to be between 250 and 500 milliseconds. With the WebSocket endpoint, the delay is minimal, but we're seeing usually under 100 milliseconds. The ask and bids, as we're getting them from our data provider, as Alec mentioned at the beginning, the asks and bid prices are conflated just to like make the data manageable. And so asks and bids are always conflated at 250 milliseconds. The trade information should be less than 100 milliseconds delayed. Are we using yield-based dividends or discrete events prior to expiration? Answered. Okay, cool. Just getting through all this. What use cases do you recommend the Web API versus the WebSocket? Ooh, that's a good one. So the WebSocket is going to be, I'd say, primarily for workloads that require low latency, or for higher, perhaps like higher volume, more information, or even, I think there's something to be said for display use cases, for the WebSockets being able to provide the latest values. It's, although it may be a little bit more difficult to implement, using the WebSocket API, it will give you data more quickly and more efficiently. It's a push versus a pull method. I think that's probably something that's going to be more dependent upon the customer's use case. And if you request a consultation, which Alec has mentioned several times, we'll be able to work with you and identify what the best product is or what the best endpoint is to meet your needs. So I think that's more of a customized answer. It's not necessarily a one-size-fits-all approach there. Let's see here. Next one, are your vols based in bid and ask or midpoint? Bid and ask. We're not using the midpoint for any calculations as far as I'm aware.
That is correct.
What underlyings do we cover? Equities, ETFs, futures, commodities, foreign, I think FX. So I know we provide, actually, Alec, you may be able to answer this one better than I will. I haven't studied all of
the feed will provide US comp data. So anything in the composite will be provided with the options data itself. However, if you require additional data, that's something we can certainly discuss and source from a partner of ours if we don't provide it in-house.
All righty. Do we have any more questions? Give it another minute or so. And if we don't have any more questions, we'll let you guys go early.
Let you guys get back to your daily routine. In any manner, we truly appreciate you guys showing out for this webinar. No, it was short and sweet, but we just wanted to kind of highlight the offerings we have regarding option data and ensure that if you do, once again, reach out to us further, we can pinpoint your use case, how we can assist with our data and effectively get you up and running. So we'd love to hear from you guys further, answer any other questions that you guys didn't get a chance to today, or, you know, hit you in the shower like, oh, needed an answer, ask that, but that's how life goes. So once again, yes, appreciate all of you coming out. And if there are no further questions, we'll allow you to get back to your
There's
day.
one more question. Can we
One more.
provide, yeah, can we provide unusual options activity? This is actually a request that we've had a lot. And it's a product that we are currently working on. It's in the backlog and we're actively working on it. And so at the moment we don't, but we can and we shall.
Absolutely, Evan. Blocks and sweeps, that's one of the products we're trying to churn out for our users, essentially utilizing our data to filter and retrieve the unusual options activity. So that is certainly a roadmap of ours. And I'd be lying if I could give a timeline right now, but it's something we're actively working on achieving and offering. So that's a great question. Alrighty, well, thank you all for coming out. We will wrap this up here, and have a lovely rest of your day. Looking forward to hearing from you, and thank you for coming.